Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market Analysis Report, June 24, 2026. This video presents a direct informational narration of the source document. Let's dive right in. On Wednesday, June 24th, the South Korean stock market led a global rebound, with the Kospi index climbing out of the previous day's trough to close up a solid 3.3%. For our structural overview today, we're looking at 6 key areas. First up, macro developments and the SK Hynix IPO. Second, Micron's earnings and options. Third, index technicals and the devaluation trade. Fourth, NVIDIA and Google. Fifth, retail trading and clean energy. And finally, institutional trades and Hertz. Starting off with Section 1, macro and the highly anticipated SK Hynix IPO. So a massive driver behind the Kospi's rise is SK Hynix. They've just announced plans to list American depository receipts on the Nasdaq as early as July 10th. The goal here is to raise up to $29.4 billion to broaden their global investor base. All of those proceeds are going straight into expanding capacity for AI chips and high bandwidth memory, or HBM. To put that into perspective, this $29.4 billion target would completely smash Alibaba's 2014 record of $21.8 billion, making it the largest ADR listing in global history. They've selected an underwriting syndicate co-led by Bank of America, Citi, Goldman Sachs, and JP Morgan. According to the source, this official announcement really boosted investor sentiment and completely dispelled those rumors from Citrony Research yesterday that the listing was going to be delayed.
Looking over at the U.S., we're seeing a strong wait-and-see sentiment in the semiconductor sector right ahead of Micron's earnings and the upcoming PCE data, leaving the Philadelphia Semiconductor Index flat. We saw capital seeking safe havens, which supported the broader market, alongside a sharp drop in the 10-year Treasury yield. Over in commodities, the Strait of Hormuz remains open, pushing oil prices down and significantly easing inflation pressures. That, in turn, cools the urgency for a Fed rate hike. Now, Citadel Securities pointed out that Warshie's commitment to lowering inflation actually enhances the Fed's credibility, supporting long-term Treasury yields and compressing the term premium. On the political front, Donald Trump posted accusations claiming oil companies aren't passing these lower crude prices down to retail gas stations, and he announced he's directed the DOJ to launch an immediate investigation.
Moving right along to Section 2, let's break down Micron's earnings and the options activity surrounding it. Micron reported what the source document describes as explosive after-hours earnings. Their Q3 results were massive, pulling in $41.46 billion in revenue and over $28 billion in net profit. But it's their Q4 forward guidance that really stole the show, comprehensively beating market expectations. They project adjusted Q4 revenue to hit between $49 and $51 billion, with an adjusted gross margin of roughly 86% and earnings per share landing between $30 and $32. As for their product trajectory, HBM4 has already begun high-volume shipping to leading customer platforms. Looking ahead, mass production for HBM4E is slated for 2027. The source notes that tight memory supply conditions are expected to persist well beyond 2027, completely invalidating earlier speculation about SK Hynix slowing its capacity expansion. The major takeaway here is that market highs often precede earnings highs. With earnings projected to peak in 2027, Micron stock could peak well before those actual profits materialize.
Driven by this post-market surge, the options market is currently pricing in a massive single-day post-earnings fluctuation of about 14% for Micron. That is a market capitalization swing of over $150 billion. Spot Gamma data shows the premium for calls betting on Micron's rise is way higher than for puts, reflecting overwhelming bullish sentiment. Get this, one buyer dropped roughly $61 million on July 17th, $430 strike calls. The source explains that with implied volatility this extreme, utilizing a deep in-the-money strategy acts almost like holding the stock directly, effectively shielding the buyer from the post-earnings volatility crush. On the flip side, Hyper Insight Monitoring revealed that right before the earnings dropped, 2 major on-chain whales consecutively opened short positions on Micron over on the Hyperliquid platform, totaling $8.3 million. One of these whales is the well-known trader CBB, famous for publicly hunting Bitcoin short whales back in 2025. CBB actually started shorting MU on June 10th. But despite these aggressive short attempts, the bulls are definitely winning in the post-market. And the broader implications here are huge. Nomura points out that Micron's current event premium in the equity index options market has actually surpassed the most recent Fed meeting. They note that while a 5% fluctuation might be macro-neutral, a 10% move is powerful enough to dictate the global tech trend for the next 1 to 2 weeks entirely on its own.
Now let's shift to Section 3, covering index technicals and the rapid unwinding of the devaluation trade.
Looking at the S&P 500 daily technicals, the 50-day moving average has turned into a high-stakes battleground. After the bulls pushed the index up to the gap and the 10-day moving average, confidence faded, and the rebound lost its momentum, causing the index to fall back. The daily candlestick formed another bearish doji with a long upper shadow. The source points out that if Micron stays strong, the index might just rebound and fill that gap. But if the gap stays unfilled for 2 to 3 consecutive trading days, we're going to see bearish momentum significantly strengthen.
At the exact same time, we are witnessing a massive structural shift. Bitcoin, precious metals, and crude oil all took significant hits due to a fierce counterattack by the US dollar. Simply put, the devaluation trade that dominated markets for the last 2 years is collapsing. This trade was all about buying assets like gold and Bitcoin to hedge against the dollar, driven by surging US debt and high inflation. But right now, fueled by a strong US economy, a robust job market, and a hawkish pivot from the Fed, the dollar is surging, completely crushing the momentum for both Bitcoin and gold.
Reflecting this exact dynamic, capital outflows from the SPDR Gold ETF, which is the world's largest gold ETF, have neared $1 billion just this month alone. Since late February, cumulative outflows from the fund have hit a staggering $12 billion. That marks the largest 4-month withdrawal we've seen since 2013. The source concludes that as long as the market holds on to these rate hike expectations, the US dollar is just going to keep flexing its strength.
Next up is Section 4, detailing corporate and technical developments surrounding NVIDIA and Google. According to FactSet data, Micron and NVIDIA have been the primary engines driving the S&P 500's second quarter earnings growth. Without them, the index's expected earnings growth rate would plunge from 22% down to just 14.9%. But their year-to-date performance is diverging wildly. Micron's stock has skyrocketed 265%, while NVIDIA is only up 6.8%, pulling its market cap down below $5 trillion. The source poignantly observes that after waiting half a year, it seems NVIDIA is on the AI menu, not at the table. Despite some appealing remarks from their CEO today, the stock broke below the critical $200 psychological barrier, locking in a clear downward trend. The 20-day and 50-day moving averages form a heavy double resistance band right above it, firmly handing the advantage to the bears. While Micron might offer a brief bounce for the sector, structural improvement really requires closing firmly above that monthly moving average.
Concurrently, the stock of CBRS, a company the source notes heavily associates itself with NVIDIA, took a 19.5% dive, breaking way below its $185 IPO price. The source argues this valuation is just far too high, pointing out the initial IPO was priced between $120 and $130, but institutional actions continually drove it up to $185, which the source describes as exploiting retail investors. This sharp decline totally ignored Wedbush's bullish $270 target issued just yesterday, which the source criticizes as harmful institutional behavior.
Over to Google. We saw an early rally after S&P Dow Jones Indices announced it will replace Verizon on June 29th to become a component of the Dow Jones Industrial Average. But that positive momentum was immediately wiped out by a bearish Bloomberg report. 2 top AI researchers at Google, Jonas Adler and Alexander Pritzel, are reportedly leaving to join rival firm Anthropic. This news really exasperates external fears that Google's leading position in AI might be slipping. The source views this not just as poaching staff, but as actively undermining the company's foundation. To counter this perception of weakness, the source even suggests Google should announce an 80% price cut on tokens to aggressively disrupt the market.
Moving to Section 5, let's examine the volatile retail trading movements and some massive utility-scale clean energy agreements.
While legacy travel stocks had a great day thanks to dropping jet fuel costs, with UBS reiterating buy ratings for airlines like American and United, the meme stock arena was absolutely wild. Fast food chain Wendy's spiked over 41% intraday before settling for a 25.7% gain at the close. The catalyst? A massive surge in retail trading forums like Wall Street Bets and StockTwits. The capital behind this targeted Wendy's because it's a battered consumer brand with high short interest, sitting at roughly 23% of its free float. High inflation and a drop in consumer dining had essentially halved Wendy's stock value over the past year. The source notes that Wall Street Bets has triggered meme crazes multiple times before, hitting names like Krispy Kreme and Open Door. But they strictly caution that these events often result in a brief surge followed by a sharp sell-off, leaving the final buyers stranded right at the peak.
Over in the clean energy space, the core narrative is crystal clear.
Renewable energy companies are actively pivoting to become AI infrastructure. Sunrun surged 12.5% after announcing a massive partnership with Tesla and Renew Home to build a 16-gigawatt platform. This setup integrates hundreds of thousands of home batteries with 8 million smart thermostats, and those resources will be open to data center developers on a first-come, first-served basis. Fuel Cell Energy is jumping in too, announcing a contract with Fit Energy USA to provide up to 380 megawatts of power for data centers. In fact, Fit Energy paid an immediate advance just for the initial 30 megawatts.
Finally, we wrap up with Section 6, tracking institutional trades and Hertz's fundamental market plunge.
Uber's stock rose 6% today as former stock market bellwether Nancy Pelosi disclosed some new long option positions initiated back on May 29th. She simultaneously bought 200 long-term call contracts, each for Intel and Uber. Both expire on March 19, 2027, with strike prices of $50. The valuation of the Intel position lands between $1 million and $5 million, while the Uber position sits between $500,000 and $1 million. Now, while these look like massive bets, the source points out that once you deduct the hefty time premium paid for contracts expiring all the way out in 2027, the actual unrealized profit on these options is pretty modest so far. The source notes her aura as a market bellwether has faded a bit recently, questioning whether there is specific inside information prompting this move.
And lastly, Hertz, which the source grimly describes as a future bankrupt stock, saw its share price violently plummet 41% today. The fundamentals are just breaking down. Thanks to a sluggish used car market, the company took heavy losses on vehicle disposals in May. Because of this, they downgraded their second quarter EBIT expectations and announced the planned $100 million common stock offering. Tying it back to what we discussed earlier, the source remarks that only a short squeeze organized by retail capital and Wall Street bets could possibly save it now.
This completes our informational review. With mega-cap tech earnings single-handedly defining macro trends and retail squeezes violently returning to the market, how will these extreme market polarities redefine Q3 portfolio strategies? We leave you with this final point for consideration based on today's source document.